This is Eric Muathe with Muathe.com for the first trading day of November the 3rd, 2008. Markets trading at down 32 points, and all morning I've been on my blog I've been asking you guys to stay short. This market is not one that you want to hold on the long side, because the indicators that have been telling me since the close on Friday, and actually beginning late last week, that this market looks very weak and you should stay short or initiate short position. It's very early, you can still go short on this market. Now let's go and look at the charts. I'm going to use the NYSE comp, and this is a 1 year daily. Over the last month we found support on this price channel lows here, but what I wanted to show you is that on the RSI you can start seeing that it's just about to roll over. You see that arc, the RSI is showing us some weakness on the daily. Let's go and look at the weekly chart for the NYSE comp. Again, you see the same price channel support, but what I want us to look at is the RSI. Now this dotted line here is when the market dropped hard in the first 2 weeks of October. So once we broke this, follow the dotted line, because that does help us understand what's going on right now. And this is here, right here, when the RSI support line was breached to the downside. That began the sell-off in October. So what was support line here has now become resistance on the upside. So on this week right now, the first trading day of the week, I don't know how the rest of the week goes, but if this is an indication, this line here is offering some support as the RSI tries to get out of this oversold condition. So that tells me that the market is not as strong as some of people have been calling for the bottom, and I don't know how low we are gonna go, but the market is not looking as strong to me at this moment. And so let's look at the 60-minute for the NYSE comp to just narrow down on the shorter time frames. Again, you see that the RSI of the last couple of days or so, we formed a double bottom, a double top on the RSI. So that makes me even more convinced that this market is gonna be weakening over the next couple of days. Let's look at the NYSE comp 30-minute chart, and again we see that we've been forming this price wedge, and we just broke it to the downside, bearish signal for the market. And what was support on the way up since we made the lows late October, that line has been breached, and that's a significant breach of this support line. So that even confirms bearish sentiment. And then you look at the MACDs on the shorter time frame are all pointing lower and lower. That tells me this market continues to be weak. Now here's a freebie. Let's look at Goldman Sachs. Now I don't know what's going on with Goldman Sachs, but something's up according to the charts. Now if you missed out on Lehman Brothers, you never made profits on Bear Stearns, you never made profits on Wachovia, on Washington Mutual, you never made profits on Fannie Mae and Freddie Mac, you might get an opportunity here with Goldman Sachs. I'm not saying Goldman Sachs is going to zero, but what I can tell from this chart is that something's not right with this stock. It's really looking bearish. The prior weekly closing high was at 88.53, and that is what should be supporting this instrument on a weekly basis. I think we are currently trading around those levels, but it's a very easy proposition. You want to go short Goldman Sachs as long as it remains below 88.53. My price target might be the $60 area, $55 area for the short term, but as long as it remains below 88.53, which is a prior weekly closing low sometime in October. You stay short Goldman Sachs if it moves above 88.53 on a daily closing basis, especially. You just cover your short. But for now, it seems like an easy trade. Go short Goldman Sachs as long as it remains below 88.53. Now, and you can see that the RSI is showing us what was support on the way down, and once that was breached, the stock is finding it very difficult to move above this former RSI support line. Very bearish, and all the indicators, especially the main MACD, is really pointing lower. Instrument seems to be under trouble. And look at the on balance volume, which tells me that institutions are really getting out of this instrument. New lows, new multi-year lows on the on balance volume. So institutions are getting out of this name. Let's look at the daily. Now, again, you see that Goldman Sachs is right now retesting price channel support. I don't know that is going to hold. But if this RSI line cannot hold, Goldman Sachs is in serious trouble. If this RSI lows cannot hold, Goldman Sachs is in trouble. Okay, now that we know the market is going down, this is how we can play it.